Ford Motors officially breaking into the electric vehicle space with its new Mustang Mach-E. Let's get to Phil LeBeau with all the details. Hey, Phil.
Hi, Melissa. A lot of chatter today, and pardon the pun for me saying this, but the chatter is whether or not the Mustang Mach-E has the horses to take on Tesla and win. Here's what you need to keep in mind when you look at the Mach-E. First of all, the range when fully charged up to 300 miles. A 10-minute quick charge, you'll get 47 miles. The base price is expected to be somewhere around $44,000 when it comes to market late next year. And they know that there's a lot of competition coming. That's why Ford needs the Mach-E to be successful. By 2025, more than 100 electric vehicles are expected to be on sale here in the United States, more than 350 in China. And what's coming next year that the folks at Ford are going to be paying attention to? The Tesla Model Y. Now, the Model Y is expected to come out late next year, around the same time as the Mach-E, and they're going to be going after the same market, Melissa. They're going after the person who wants a crossover or small SUV in that $35,000 to $60,000 price range. That's where Ford believes that it can beat Tesla at its own game. The race between electric vehicles, that is really going to heat up late next year. Guys, back to you.
The secret ingredient to all of this, Phil, though, is that Ford is making these cars in Mexico, so the price will be cheaper, right? And so therefore it's more competitive with Tesla.
Well, yeah, and we talked with Jim Hackett last night, the CEO of Ford, and he said that's the way we make this vehicle profitable. They plan on it being profitable after you strip out the costs because, in part, it's going to be built in Mexico. And we asked him, are you worried that the president will say, oh, why are you building down there? You should be building here in the U.S. He says, look, we're going to build a lot of electric vehicles here in the U.S. We think the Trump administration understands our position that we have to use all of our facilities, not just those in the U.S.
Right. Phil, thank you. Phil LeBeau in California for us. Is this going to make Ford more competitive? I mean, their game plan is to electrify their iconic vehicles. So after this, the F-150, for instance,
no, I
could
get
be electrified.
That. But, you know, the other side of that coin is the Mustang brand is iconic. And the fact that they're using this, to me, I don't know. I'm sure they had many meetings about this. They had a lot of focus groups. I happen to think it's a mistake. Good for Ford, though. If they thought they were going to bounce in the stock, didn't happen today. And quite frankly, it hasn't happened for the last 8 years. So although they may be more competitive, you know, they've been behind the 8 ball seemingly now for the last decade. I don't know what makes the stock go higher. The car might be fantastic. I don't think the stock is.
What's wrong with the stock?
I think it's remarkable. You've had a rally in global autos the last couple months with Volkswagen and BMW and Toyota and Honda, and these can't participate. Ford doesn't work, GM doesn't work, so it's clearly saying there's still something wrong with this picture. I think if you're going to play autos, buy Toyota, don't buy Ford.
When you look at the vehicle, it's obviously a copycat of Tesla's vehicle. There's nothing that's stunning that says, okay, I need to have that over a Tesla vehicle. Tesla still made it cool.
You don't think it looks like a Mustang? You don't think
great.
the Mustang looks like a Mustang?
Yeah, it looks cool. No, I think the car looks nice, but the Model X is what everyone's chasing. This is the price point of the Model 3. But I still think Tesla, Ford should have been way ahead of this, and I feel like they're way behind, even a GM.
All right, speaking of electric vehicles, Tesla has been on a recent tear, and if you're a loyal viewer of the show, you know that Tim Seymour has been short this stock. So how exactly is he navigating this trade? Time to go to trade school, classes in session. So Tim, why don't you break it down for us?
Yeah, so first, I just want to talk a little bit about how someone should think about any short, but then specifically how I've been thinking about Tesla. I mean, ultimately, you have a case here where timing is essential. And as we're going to get into this, I'm going to show you where on a chart I thought Tesla, which if you look at a 5-year chart, really didn't do much and also had this real ascent period. But it wasn't until really January, February of 2019 that you started to have an opportunity. We'll get into that. Remember, size your position. This is also really very important. So how am I going to put this short on? For many people, a short is more of a hedge than it is a tactical short. A tactical short, folks, to me, should be a 2 to 3% position, maybe a 4% position if it's very high conviction. If it's a hedge, it's a totally different ballgame. And then finally, define your risk. So to me, it's very important to understand how I'm getting my short exposure. And in the case of Tesla, to me, a majority of this position was put on through puts where I thought I could be much more tactical, but more importantly, define my risk for a stock that I actually think really is a very difficult one to bet based upon fundamentals. And frankly, we've seen the irrationality of the stock on the way up and the way down. What I simply just want to show you with this 5-year chart is, you had a dynamic here where clearly, for the most part, you had this move. You've been watching this show. I've been negative on Tesla for a long time. It didn't mean I necessarily felt the need to go get into the market and actually short it. I probably just told you that I thought the valuation was awful. I didn't understand why people weren't talking about competition like Ford, and that you had a dynamic where ultimately you were going to get, I think, some re-rating in the shares. So finally, here's where I decided to get involved in the trade, and where I felt it was time to actually be both tactical and take a thesis. The thesis that I had was really that we were starting to see destruction, some fallout, some flaws in the balance sheet. And as you remember, somewhere around here when we got Q4 earnings of 2018 is when the stock really started to come under some pressure. For me, I started somewhere around March putting some puts on, and I took a small short position in the cash. And ultimately, by March, as we got into April, you started to see an acceleration of that. As we got into first quarter earnings, you got a dynamic where people were really able to get in this. So with puts, I think you have to trade them very aggressively. Not only do you define your risk, but you actually have to trade monthly puts and trade them actively. As we got into April and May, it was a case where at 175, I thought Tesla was a company that was actually maybe going to wake up one day and tell you they were restructuring. And right around here, I bought 175 puts and rolled them down to 125 as they got in the money. Ultimately, you have a case here where I think it was a company that somewhere around here, I thought maybe was going to break, and I wanted to be aggressive. The cash short is something that I still hold, but if you look at the average position, it ultimately gets to a place where you've got really a 10 to 15% loss in the underlying, but that's a function of mostly playing it tactically through puts and then having a cash short. When I look at Tesla and I look at this run for the last 3 months, ultimately, where do I want to be? Well, 370 is the level that I think I have to be watching and where I would probably be blowing out this short. But I don't think we're going to get through 370 until we hear from the company on Q3 and Q2. Where's profitability? Where's the company actually in terms of the balance sheet? That last quarter showed us a lot of opportunity. But at 370, that's where I think it's important to say cash position, which is about 1/3 of the overall, is time to go.
So I think it's very important, Tim, to underscore the point that you can be short this stock, and depending on how you do it, just because the stock is up 40% in the past month or so, that doesn't mean that's how much you're down on this trade.
Yeah, so as I said, I was pushing the stock somewhere around 185, 200 when I thought I had momentum behind me, and I was pushing it through puts that I was rolling down and trading pretty actively. The cash position that I've held is one that, to me, also allowed me reinforcement of my underlying. But yeah, I think if you look at my average position, I'm probably around 310, 315 overall in my exposure in the stock, cash and puts. And I think at 375, if we get different news from the company, I don't need to stick around and wait to this. I still think it's got enormous fundamental issues, but I do think it's a case where you don't need to stay around and wait for that.
Higher or lower? Where does Tesla go from here?
I've thought lower as well. I'm sort of in Tim's camp. Jeffrey's just raised the price target to 400. I think your catalyst could come into form on November 21st. They're going to roll out this Cybertruck. Can't wait for that. So we'll see. I mean, that's the level that we saw. 375-ish was the level we saw in June of 2017. I'm with Tim. Obviously, the cash flow position has improved, which is why the stock has gone up $100 in a month and a half, 2 months. But I think it's over its skis.
Just quickly.
Higher. And I think there's two
Higher
rules I would add to Tim's rule. Don't marry shorts and watch the debt. And the debt in Tesla has improved here.